So I think what has changed is, if you go back, that's a couple of years ago, that was the period of high-profile failures and fraud and that kind of thing. And what's happened is, I think, the industry is maturing, our understanding of it is improving, and in a sense, it's becoming much more mainstream. So all of us are revisiting, the things that were done during that era. I think the current view is that, that it's appropriate it's always been appropriate for banks to choose their customers and to be able to undertake activities as long as they're safe and sound.
This is something we've been focused on digital currencies for, a couple decades. This is something we've been focused on digital currencies for, a couple decades.
You were criticizing the Federal Reserve Chair before coming to this summit.
Yeah, I think he's terrible.
I was wondering if you've begun interviewing different candidates for the Fed pick.
Yeah, I know within 3 or 4 people who are going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. We have no inflation. We have a tremendous economy. Hundreds of billions of dollars of tariff money is pouring in. Factories are being built because they don't want to pay the tariffs, so they're building them all over the country. I think we're close to $15 trillion. I told you $5.1 trillion from the Middle East alone, but of investment money coming in. There's never been anything like that in the history of our country. But we have no inflation. And we have borrowing because Biden, stupidly, they did short-term debt. So we have borrowing coming up. And, we'll go 10 years, maybe longer, maybe shorter, but we'll go a long period of time when we do the debt. And because of him, because of this guy, we will have to pay for years. We'll be paying for him. And I said to him, listen, there's no inflation. He says, but maybe there'll be some. That's true. I said, if there is some, what you do is raise the rate. I'm okay with that. You raise the rate in 2 years from now or in a year from now. But because the rate's high, we have to pay more for debt. It's pretty equal. In other words, if it's 4%, it's 4%. If you drop it a point, you'll pay 3%. So it's fairly equal, not necessarily, but fairly equal. So we're going to end up paying maybe 2 points or 3 points more. 3 points would be about $900 billion a year because of this very average mentally person. He's an average mentally person. I'd say low in terms of what he does, low IQ for what he does, okay? Wait, so instead of paying $900 billion, we don't want to pay 900 just because he doesn't want to lower the rate. I said, if there's inflation in 2 years or 3 years or 1 year from now, you raise the rate and you take care of the inflation, among other things. But he's probably a very political guy, I guess. I don't know. I think he's a very stupid person, actually.
I remember when the phrase was sound as a dollar. That phrase is getting less used these days. In fact, Bloomberg reported last week that foreign companies are demanding to be paid not in U.S. dollars, but in euros or Chinese renminbi. First, what benefits does a strong dollar have for us, and how will we suffer if the dollar is no longer considered to be the currency of world record?
Right. Well, so there are enormous benefits to having the dollar be the most important reserve currency in the world. It remains such, and for very long standing and continuing reasons, which is, our rule of law, our democratic institutions, our commitment to price stability, our open capital markets. All of those things remain intact. And I think being the reserve currency doesn't last forever, but it's quite a durable equilibrium, and I suspect that we will be the world's reserve currency for a long time to come.
But you're seeing indications that confidence in our currency is eroding in some places. Is that
I wouldn't say that. I think it's this is a very fundamental kind of foundational aspect of the global financial system is the role of the dollar. And markets move around. Markets are digesting information that's sometimes very challenging to digest. I'd be very reluctant to come to any longer run conclusions about things that fundamental this quickly.
Tell me what tell me what the bond market's telling you.
bond market's fine now, functioning well. It's pricing, it's reacting to economic news. There's adequate liquidity. Rates have come down pretty significantly from where they were a couple months ago. So I think I think inflation expectations have come down a bit from April, and in general, the bond market is functioning well.
Okay. Explain to me why we have seen in the last few months weakness in the dollar.
That's a great question. And of course, the Treasury Department is responsible for the role of the dollar. So I don't know. I think I would go back to the thought that markets have been digesting an unusually challenging set of circumstances, and have reacted the way they've reacted. The dollar's kind of stabilized now. In fact, it's moved back up here in the last couple of weeks a bit. And there are plenty of people who are still writing that the dollar is still overvalued. We don't have a view on that, of course, but I wouldn't really have an opinion on exactly why it is where it is.
Well, clearly there's a lot of geopolitical risk right now, which would lead one to conclude, all things being equal, that people would be flocking to the dollar and it would be stronger.
Well, you have seen some of that here in the last few days, but again, I don't really have an official view I'd like to share on that. I think there are possible explanations, multiple possible explanations. Again, one of which is that some people still feel the dollar is highly valued. Yeah. But we'll see.
I wanted to ask you because, in central banks in other countries, including Bank of England and European Central Bank, they've begun modeling the potential macroeconomic effects of artificial intelligence. They're thinking about how they can use AI to be able to do some of the forecasting, to think through what comes next. I guess I wanted to get a sense of what the Federal Reserve is thinking in terms of similar work in the AI space.
We have lots of people doing work on AI and more than that, even monitoring research that's going on everywhere in the world. And, speaking of uncertainty, it's very clear that it has the potential to make really dramatic changes in our economy, in our workplace, in the jobs of workers, in the way companies work, and all of those things. But it honestly, there's a tremendous uncertainty about the timing of that and what the ultimate consequences will be and what the medium-term consequences will be.
I was wondering if the Fed is evaluating AI credit models and how that could potentially deepen disparity in credit access or violate fair lending standards. Is that something that you've looked into at this point? And
yes, absolutely.
Is the Fed looking to potentially affirm some industry standards on this?
It's something we've been aware of for a long time. There's a lot of research that's been done. Before generative AI came along, it's also just machine learning and technology generally. There are implicit biases that can appear. It's something we're very well aware of, and we do work with people to make sure that doesn't happen.
Okay, thank you.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Jerome Powell on crypto. The industry is improving, and they have a better understanding. But what did he say a long time ago? They've been studying these digital assets for decades. Remember, guys, this is a plan that moves in phases. And we have Trump playing the Hegelian dialectic. So when Powell leaves, it's going to be all Powell's fault as we go through the fourth industrial revolution. And we know there's going to be a lot of job loss. And what are the people going to do? Beg the government to come in? And they already had that solution together 10 years ago. And remember, the Crypto Teacher told you. And we have Jerome Powell already told us during the C word that they learned they can do a lot without people due to technology. And a lot of people will be get left behind. And that's why I play this video constantly so you can see it's a plan and it moves in phases. And we have Senator Reid on countries asking for the euro and the Chinese renminbi instead of the dollar. Countries are moving off the dollar. Remember, Trump's job is to devalue this dollar, get us on a level playing field for this new digital economy. And Kennedy asked Jerome Powell about the bond market because nobody wants this long-term paper. And he also asked, why was a dollar weak? Guys, that's the reason why stable coins are going to be so important. Countries are moving off the dollar. And what did Jerome Powell basically say? I have nothing to do with it. When it came to job loss due to AI, I have nothing to do with it. And we have AI, quantum computing, robots, algorithms, and drones are definitely about to take this economy over, and it's going to put a lot of people out of work. But the government has that solution, that universal basic income. But down the road, they're going to attach that smart contract where they'll be able to tell you what, when, and how to buy. And you have 3 to 6 months to spend it, or poof, it's gone. You do not want the government to feed you, or eventually they're going to starve you. Give you that 3D printed food. And remember, the crypto teacher told you. And Jerome Powell talked about tariff inflation is definitely coming, going towards the end of the month. And guys, don't forget, the big corporations front ran the tariffs, got a lot of the goods inside the ports, so therefore they wouldn't have to pay for tariffs just yet. But now they're going to be in a position where they have to. And who's going to eventually pay for it? That's right, the people. Guys, we've seen this movie before. And we have Chinese goods are moving to the emerging markets. Imports are going down. And don't forget who started it. That's right, Janet Yellen. The same way when we have to refinance this debt, when Trump said he needs to refinance the debt, don't forget Trump was in office and Mnuchin had an opportunity to push this debt out 50 years. He didn't do it, and Janet Yellen didn't do it either. Why? Because this is a plan. It moves in phases. They knew they were moving us over to this new digital economy. And if you're working every day, you're taking care of the kids, taking care of your family, the last thing you're looking at is where is capital going? Yes, it's coming out the United States and going to the emerging markets. And I tell you time and time again, because the mainstream media is not going to inform you. The only reason why we haven't felt the effect inside of America is due to the central bank that's holding us up. And then we have billionaire LaFont talks about the de-dollarization of the globe. And again, that's the reason why we have so many countries getting off the dollar. And a lot of countries, of course, the central banks are buying up gold. And then we have Bitcoin being bought up by all these corporations. We know eventually that NAV is not going to turn out well at the end. But the central banks are going to let all this run wild and then rein it in at the end. We've seen this movie before. And remember, the crypto teacher told you. Because he knows, when it comes to the NWO, it's all planned out. You have a wonderful day.
The focus on the changing technology landscape and with artificial intelligence, generative AI, and just its impact on the economy and labor market. How would you describe AI's impact on the economy so far, and how is the Fed measuring it?
The effects of AI are probably not great at this time. Generative AI, and the question is how great will they be, and how big will they be, and how quickly will that happen? And anyone who's been exposed to what AI is capable of has to be pretty stunned by what it's capable of. And this is even the early days too. You know, what the experts tell us is that, you know, in 2 years, these things that you're doing, that'll be nothing compared to what we can do in 2 years. So I think it has enormous capabilities to make really significant changes in the economy and the labor force. And you know, it can either augment people's productivity, or it can replace people, or it can do a little bit of both. But it's going to be something.
You preempted my question, actually. I saw a recent article, and a CEO of an AI company actually said AI could, quote, wipe out half of all entry-level white-collar jobs and spike unemployment to 10 or 20%. And I think he said in like a matter of a year or two. Do you think this is a reasonable perspective? And how would AI-driven productivity gains or worker displacement affect how the Fed defines full employment?
I don't know whether that's. I'm not the person to say how quickly that will happen. What's happened before with technology is it just seems to take a long time to be implemented. You know, there's the technology, what it's capable of, and there's what it actually does when implemented. That last phase has tended to take longer than people expect. Will it happen with AI? It probably will. But in terms of maximum employment, we don't. The Fed doesn't have the tools to really address the social issues and labor market issues that will arise from this. We don't have those tools. We just have interest rates, and we'll always be able to balance the labor market so that supply and demand are in balance. But things like what AI does and what other things do from the outside, we just have to take them as they come. Name forecaster in the country, which is very similar to ours, that there will be some inflation from tariffs coming, not yet, but over the course of the coming months. And I think it's reasonable to expect that because someone has to pay. This is hundreds of billions of dollars of tariffs we're taking in. Some of that's going to fall on the consumer. Not all of it's going to fall on foreign manufacturers. And that's the only insight we have. And we're just kind of wanting to see more data on that before we move.
One final question about data. Our trade deficits with China, the EU, Canada, and Mexico have all significantly dropped recently. What does the data tell us about that?
Well, I think that's
how that would affect inflation.
How it would affect inflation. I don't know that it has implications for inflation, but it obviously reflects the tariffs. I think recently you've seen Chinese imports come down quite a bit.
Thank you.
Yeah, we think it does, Morgan, and we think the outsized gains in emerging market equities and fixed income, as well as the non-dollar European equities and fixed income, were set to continue into the second half of the year. And really what's been driving that outperformance has been the capital reallocation story. So capital being pushed away from America into the rest of the world where there's larger fiscal stimulus, some of it due to defense spending and infrastructure spending, but really that's going to be driving fundamental growth in European economies and emerging market economies. And that's really pushing equities to record elevated levels in emerging markets. And we think that continues. And the pressure of a weaker dollar and the converse to that is stronger emerging market countries. What that's creating is effectively a disinflationary backdrop for the rest of the world. That's allowing central bankers in emerging market economies to cut rates more aggressively. And we think we're just at the start of what can be a multi-year virtuous cycle where central bankers can lower rates, they can really focus on growth versus inflation. And this month alone, Morgan, just for a statistic, the number of emerging market central bankers that are cutting rates jumped from 28% of countries to over 60%.
Wow.
And that's emblematic of us being in this virtuous cycle.
I always thought Bitcoin's amazing, but it's double or triple the volatility of the NASDAQ. NASDAQ's already pretty volatile. Why do I need to deal with this added volatility? Recently, Bitcoin, when it went down during the tariff, only went down as much as NASDAQ. So it seems the volatility as an asset class is coming down, which I thought was pretty interesting.
But given your sort of thesis, do you say to yourself, even at this point in the ball game, if you think it's going to double or triple and going to be part of the NASDAQ 100, if you were to think of it as a company?
Yes, I have to think about it.
That you should own it now?
Yes, I have to think about it now. Do I own it now? Do I own it tomorrow or in a few days? But every day I do think, why do I not own it? And I think to be a good investor, it's not just like owning the obvious stock, but sometimes you have to change your mind and you have to just say, well, I made a mistake and I'm changing my mind, and maybe Bitcoin will be that.
How do you come up to that valuation? Is it as a percentage of gold's market cap or something?
So I thought like the market cap of the world, the net worth of the world is, I think, 450 to 500. True. Equities are, let's say, 120. Gold above and under the ground is 20. And then Bitcoin is 2 trillion. And I was like, okay, well, 2 trillion, let's say it represents 0.5% of the net worth of the world. Could it go to 1 or 2? Some people say, oh, Bitcoin's going to be 100 trillion. I'm like, okay, that's not, maybe a bit of an aggressive estimate, but could it double over a period of time? And then we talked about the de-dollarization of the world, the end of U.S. exceptionalism. So those would be some of the reasons.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.